Company on our radar came out with their numbers yesterday. Good set of numbers. The company's clocked in a 32% jump in their revenues in Q4 for the full year. It's a 25% growth. The stock yesterday was up 15% plus, and it's added on another 1.5%. To talk more about the outlook going ahead, we are joined by the company's CEO, Virender Jeet, to take some questions. Virender, morning. Reema here. Any guidance, sir, to begin with for FY24? On the top line, can you continue to see a 25% kind of growth? And what about on the net interest margins and your EBITDA margins? Will you maintain the guidance you had given us last time?
Reema, thank you for having me on our channel. I think we have done last year has been good, and I think the order book has been significantly better than even the revenue growth. So we have no reason why the next year should not be also growth here. And historically, we have been able to maintain around 20% of growth, and we see no reason why we should not be able to do that. Our margins are generally very high. We have a gross margin of more than 65% in our business, and almost 55% of our license and annuity-based businesses have no direct cost. So we continue to expand our margins as we grow. But we also invest more aggressively on our sales and marketing and R&D. And for the next year, we still want to maintain the guidance of margins in terms of PAT and EBITDA at roughly around 18 and 22%.
Okay, so net interest margins at 18%. And your EBITDA margins at 22%, right?
Yes, yeah.
Okay. You've also said that there has been a 27% increase in the average deal size last year. What does that number stand at right now in terms of deal size? And two, your annuity as a percentage of your overall book is 61%. And that number has been constantly increasing. Where can you take it up to?
Yes, so, as we are getting into more mature markets and we are getting into larger accounts, our deal sizes are growing. And I think I don't have the exact number, but I think what we track is in terms of number of accounts who give us more than 5 crores of business. That has gone substantially. We have now around 50 customers who give us more than 5 crores of business. And so this is a continuous handle for the company. So average deal size will keep on growing as we grow. Our businesses generate a lot of annuity from what we sell. The licenses some of them are in subscription and some are in the perpetual. Even perpetual licenses have annuity. So as our business grows, there's always an extension in the compounding of businesses in terms of our subscription. We have reached 60%, and as the company's size becomes larger, we are at roughly around 130 million. But at around 200, 300 million, we can expect this all the way go up to 75% of our business.
So 75% will be the contribution from your annuity business. That's what you're saying, Mr. Jeet?
Yeah, yes.
Okay. Can you give us a sense of the geographical breakup as well? Because what we saw at the end of the fourth quarter was that, APAC was a little muted, I believe. So in terms of geography, how are different zones doing for you? The domestic business seemed to be a little better off.
Yes, so I think India, Middle East and APAC have been our traditional markets, and I think they are doing extremely well. And right now, the quarterly revenue shares generally reflect, because the revenue numbers are very small. Even a single deal changes percentages. But on the order booking position side, all 3 geos have done very well. On US market, I think we have done a better job in the second half of the last year, and we want to continue that momentum. But for going forward, we see both Middle East, India and APAC to be very high growth markets for us to exceed our growth rates. And we want to really put and invest our money in mature markets like UK and US and push those growth engines as well.
Okay. Any deal cancellations, any deals which are getting paused, deferred for you?
No, not really. We are slightly a different. We are in a licensed IPR-based business. We are a software product company. So, most of the times, both on the growth side and on the downside, when we are looking at deploying IT for optimizing cost, we do get opportunities. Having said that, so far we have not got any news from any clients where they are looking at that, especially if in markets, India, Middle East, and APAC, they seem to be still on a growth trajectory. On US, we have not got any messages right now. So I think let's see how the market unfolds over the next 6 months, and then we can take a look at that.
Yes, you have been maintaining how your exposure to US and Europe is less than 30%, and that has helped you shield some of the volatility that we are seeing in the mature markets. Thank you very much, Mr. Jeet, for joining in. That's Newgen Software for You, confident that FY24 will at least see a revenue growth of 20% with EBITDA margins of 22%. Get into a break. We'll come back with more on the markets.